Welcome back, YouTube. So, if you watched my last video, I made a video a few days ago, and I was talking about the fact that we were going to reach for liquidity. For Doge, that means 12 to 13 cent, which is what I titled the thumbnail in the video. And for Bitcoin, that meant around the 58,000 mark. Now, as you know, we've obviously hit those numbers. So the question is, where's the bottom going to be, and what does this mean going forward into the bull market? So I wanted to explain a couple things because I believe it's important to put things into perspective when it comes to the prices that we hit over the last couple of months, where we are now, and where we're going. So the biggest thing, and what I want to start with, are the prices that we hit the lower last couple of months. I'm going to start with Bitcoin, then we're going to go into Doge and draw the comparison. So the things that were unique about this cycle was the aggressiveness prior to the halving, right? We hit an all-time high on Bitcoin. If we take a look here at Doge, we had two things that happened during this cycle that we've never seen before, that gave a hint of how aggressive this capital is. And it's not retail pushing that. We're talking about hundreds of billions of dollars here. And the first thing is Bitcoin hitting an all-time high prior to the halving, right? Dogecoin, right? We're going to take a look here and compare that. The tear that we had, not only did we run alongside Bitcoin prior to the halving, which has never been done before, but we've also, this period here, this aggressiveness, the initial breakout, where we had roughly around 9 green days consecutively, right? This is a daily chart. We've had 9 green days consecutively, and then we went on to do a test at around like 22.86, roughly around 23 cent, right? We had about a 300% rally. Now, the reason that even when it comes down to this price aggression and saying, okay, hey, where's the top going to be? Where we're going to hit 30 cents and stuff. The reason that I was cheering for these coins, especially initially when I was talking about the fact that there was a divergence in the aggressiveness and how early these coins were running, is when you have the halving dip, the pre-halving dip, and all that kind of stuff, things that which we've talked about. It matters about that initial run up, right? Because in order to have that dip, typically you have the run up, but how high you run up, the aggressiveness of how high you run up, is almost like a foreshadow for what happens during that run, right? And we'll take a look here at history in a moment, but obviously the higher those numbers are, the higher the consolidation is going to be, right? And the higher the consolidation is going to be, the higher the bottom is going to be from where it would have been normally. And of course, that kind of translates into where you end up during peak bull run. So, it's better to obviously have to run to 22 cent, have the bottom at 12 or 13, and then run to the all-time high, versus what would historically happen is Dogecoin wouldn't have been moving right now, and it would have been somewhere between 6 to 8 cent. We would have had this sell-off at around, we still would have had this sell-off with Bitcoin, because that Bitcoin, Ethereum, those would have been the only coins running, and Doge would have dipped down to around 4 cent, somewhere around there, and then we'd have had that initial run up from there to when the altcoins started running, we'd have that run up after somewhat maybe like September through October, we'll typically get that run, and then we'll run that period through the last half of the bull run. But obviously, we're running a lot earlier now and a lot more aggressive. So this is a much better position. So those numbers really matter as far as for where we ran during the run and where we are now. Now, the pattern that we're seeing here, and the reason I think this is really important, because a lot of times people are saying, "Oh, the coin is dead" and stuff like that. We need to get that deal with that level of, because sometimes I believe it's trolls. And then sometimes I believe that's people that mean well, but they're obviously just ignorant of cycles. And sometimes people, they focus only on what they're invested in and kind of ignore the world. So for those of you, in this case, this is your first video watching, or you simply just didn't watch the video where I covered the 3 things that affect the market. The 3 things that affect the market are obviously going to be macros, a specific whale or like a catalyst for, let's say, like Dogecoin, like we had that whale sold like 83 million coins, stuff like that, or a Bitcoin sell-off, which causes an reevaluation of institutional percentages that they have allocated to certain coins. So if they say that, hey, we're not heavy enough in Bitcoin, you'll see some sell-offs to kind of raise capital so that they can take positions. Or if they say, hey, we're too heavy, the macros aren't looking good, you'll see that adjustment as well. So these are all things that affect not just Dogecoin, but obviously Dogecoin is affected. It's a top 10 coin. So that allocation certainly gets affected. But those three things are going to affect price. So obviously, sometimes people believe that, oh, the coin is a coin specific thing, and it's not, right? So I'm going to pull up this chart here because this is what I like to do to show the patterns that we're seeing here, right? Because even here, we're more so in neutral for the entire market. So, which is, we're not in extreme greed anymore, but we're not in fear. So this means somewhat that stability is setting in. We'll take a look at some other charts here in a moment. But I want to point out that these chart patterns, this is what you want to look for if you ever wonder if there's a divergence or if something specific is going on with your coin or with Doge or something like that. You can come here, Coin Market Cap, it's free. Take a look here at these graphs and see if it's a divergence here, right? See, take a look at the chart patterns and see if they're lining up. As long as the institutions are pulling money at the same time, putting money at the same time in a similar fashion, you are on track with the market. There's no divergence. So you can cry and scream and say Dogecoin is getting picked on all you want, but it's not. This is not a Dogecoin exclusive thing here. It's simply not getting picked on. You can see these charts here, like with all of these coins, they're very similar, almost identical. And if you want to believe that the retailers are doing this and aligning, if you want to believe millions and millions of people are coming together and aligning themselves and pulling money at the same time and then putting money back in at the same time, and it's all a coincidence, that's your business. But for those of us that have done the research, we're going to believe that there's a few institutions that are swapping money around and creating these identical patterns here. So if your coin, whether it's Doge or any other coin that you see on this list, if it's following this pattern, it's not being picked on, right? Ethereum here, even here, you can see that there's some slight aggressiveness, and you can do have retailers obviously playing in this market as well, because this chart here, everybody's in it, right? But when you're talking about sways of, like here, we're dealing with $33 billion in the last 24 hours. Even for Doge here, over $1 billion in the last 24 hours. And then you look at the wallets and the average amount of coins per wallet, the average dollar amount per wallet. You'd have to be insane to think that retailers are dumping these coins or coming in, or this is retailers doing. So please just do a little bit of research and you'll get some answers before you start leaving comments like that or making suggestions. It'll certainly become clear. I'm going to take a look here at, matter of fact, let's go back to the chart here before we get into long, shorts, all that kind of good stuff. So for Doge, what we talked about was around this 12, 13 cent mark, which is where we're holding pretty nicely here. We got some solid rejections. The biggest thing is where Bitcoin is going to hold up at, around that 56 to 58,000 mark. That'll determine how well we hold here. But as far as the retailers, they've certainly been buying. That's what these long wicks are. This is where these pushes are, because they actually came down here, but we didn't close. We closed at around the 12, 13 cent mark. Typically, we'll have those zones because where Dogecoin likes to close is around the 15 cent mark. Now, obviously, you have those huge catalysts that can push the coin down, but typically that's why you see the aggressiveness in these candles here when we close below that 15 cent mark. And we have these sell-offs that there are aggressive buys that take place, and you start getting these really long wicks on the candles here that push the price up, and you will see kind of like where the market is pricing in that equilibrium. So for here, this support level is going to remain intact unless we get a further breakdown in Bitcoin somewhere probably around like 56,000. So we'll take a look here at the longer chart here in a moment. But it makes a big difference as far as for where especially if you're trying to get in, it's going to make a big difference as far as where that bottom is going to be. So here, obviously, we have this around like the 58 mark, which is what we've been talking about, 58, 59. And we had this, it was saying similar price action where we're having this push up here. The biggest thing is where this candle closed at, because when I did this, when I put this line here, this was the math of around like I believe a 40%, or I did the calculations between a 2016 and 2020 run and gave like the average range that Bitcoin pulls back after having prior to that climb and then that transition into peak bull run. So that's roughly where we are now. I would say if you're looking to say, okay, is it potential for us to get to further downside, we can look at that at around the low 57 mark, high 56. And then we'd be looking at a drop probably to somewhere around like the middle of the 50 range or so, depending on like if obviously what's driving that. But we're just talking about simple supply and demand that puts that. But either way, right now we're about 3,000 above that, and the market is showing neutral. So not necessarily extreme fear going on. So that just depends off of what the big boys want to do when it comes to allocation. So for shorts, and I wanted to point this out, shorts did not play a role. They're trying to come in now to capitalize off of this. But even now, you're not seeing the bigger candles, because these candles, as I was talking about on X and in the community section, shorts came in later. They weren't jumping in on this prior to this. Wasn't like necessarily like shorts doing it. They kind of piled on it once the coin started, like once the market started selling off. But this isn't shorts doing it. They're trying to capitalize off of it. But even now, they're not showing much confidence, because if they believe this was going to go down, they would have been putting up candles something like this in these positions here. So right now, even here, they thought it was going to go. This here was basically like the opposite of what you would see for like a positive candle. So this is them piling in, but them closing lower because they changed their mind throughout the day. And this is that very low movement, kind of what we're talking about with the grabbing liquidity for the candles. When the candles get weak, we're talking about the fact that they would this would be on a short chart, this would be showing lack of confidence as far as for the direction of the market. So right now they're trying to capitalize on it. They believe there's a chance that it can go lower, but they are not the reason that you're seeing this this dip here. They're just trying to capitalize off of it, because the only way you can allude to say, okay, well, this is short pressure doing this is if you see these big spikes prior to the dip. If it happens after the dip, don't give the shorts more credit than they're due, because that was not it was not their doing. So you don't want to never give them more credit than what they do, because technically one of the things that they capitalize off of is fear in the market, so that they can incite fear and cause the market to sell off after. So you have a non-organic sell-off, and then you can actually produce fear. Then you can have an additional push down in price, and then they can kind of come in later like they're doing now, and hope they can recoup some of that money that they can come in and take a profit. So we're not helping them out in that regard. We're going to take a look here. I want to talk about 2016, 2020, 2024. What we're seeing now, just to kind of go over everything and show you that this is normal. Nothing yet has happened that is abnormal. Bitcoin's climbing back. This is, let's go to all. I'll pull this data here. And I made a post the other day. Matter of fact, sorry about this jumping around, but I think it is relevant to point out, because it's very important to kind of put things into perspective here when we're looking at charts, to get an idea of, let's see here. Trying to copy and paste the link so that way it'll be a smoother transition. There we go. Okay. So this is what I posted yesterday. I said, remember when Doge dropped from 5 cents back below a penny and was struggling at around 2 cents? Remember when BTC dropped from 17K to 3K, all before the big runs of that cycle? So if you guys are wondering, I'm talking about the cycles, I'm talking about 2020 and 2016, right? Those cycles where we had the big run up before, and everybody was calling the bottom, saying that it was all over. And then it turned out that was just the beginning. The reason you cheer for the initial run is because it sets the marker for the cycle. Tune out the BS. Both of these assets have multiplied their initial run up many times, 100% of the time since their creation. Please don't get short-term targets mixed up with long-term targets. If you're long-term, the only reason to pay attention to short-term noise is for increasing position. Imagine watching your 401k or Vanguard account and panicking every Fed meeting or drop. You wouldn't do that. The best thing retail can learn about crypto is to pay attention to the cycles and adjust their mindset from short-term to long-term. Your mindset needs to match what you're doing in your portfolio. Unless you are day trading, no need to fret. If this bothers you, as soon as you hit profit, you should probably get out. These ups and downs are nothing compared to what's going to come. What I mean by that is that we're going to see some extreme volatility coming once we hit some of these higher numbers, once the market gets really going. And those of you that were here in 2020, 2021, you know better. Like you know about the swings here. I know it's exciting when it's when the market is mostly going up, but you know about these swings here. There's no need to have amnesia and pretend like, oh, okay, the market's only supposed to go up. I can't believe we're having a pullback. There's at no point in time, even during peak bull run, where we're not going to see extreme volatility. So you know better if you've been here since the last cycle. So I know impatience can play a part, but there's no need to pretend like you were in a situation, unless you got in like the last week or two of the bull run, then you certainly saw the ups and downs, especially on a daily candle. You can do this here, but if you're looking at like the hourlies and stuff like that, that thing was up and down. Like it was a roller coaster. But overall, let's get into these prior halvings here. We're looking at overall price action here. I want to, what is this? Okay, that makes sense. I want to do this. So 2016, we are, let's go to halving. Let's go somewhere around May or whatever. Okay, so BTC is around $5,000, right? And the 2016, the initial run up, where you had the run up until, let's say 2000. Let's say so around June, you're looking at around $2,600, and you had this initial run up here to around 3,000. Somewhat of a sell off back down to like 7. And remember, this is, matter of fact, let me zoom in here because I don't want to miss out on any of the meat here, because sometimes the time frame, because over time these peaks and valleys look like they're nothing, but during the moment it's extreme panic going on here. So we had a lot of sideways movement here, right? Going into 2017, we had a peak at around $4,000 and dipped down to around 3,000. We're talking about 25% dip down in 2017, a run up again, and then a big dip down to what is this? Around $5,000, right? And then we peaked at 19,118, right? And then of course we had the consolidation period. The people that bought there would have obviously said that it was over. It went down from 19,188 to around $3,000, right? Then we had the run back up in, what is this? Right before 2020 to around 13,000, right? This is prior to the halving, right? This is gotta keep this in mind. This is the run up prior to the halving, running up to around $13,000. Didn't hit its all-time high at that time, but a big run up. And then you had the sell-off, right? All through the halving period, after the halving, not doing much, pumps, dumps, all that kind of good stuff. And then you got into the groove of this ascension here. And even then, you still had some big sell-offs. And I'm not even zooming in to show you the extreme volatility that's going on. This is more so of I'm looking at on this is like a 30-day chart here. So you're not even seeing the extreme swings really, but you're getting an idea of the speed at which this kind of happened. It wasn't necessarily quick, even on this candles here, but you saw that the fact that they have sell-offs and the gradual ascension, right? It was not a smooth transition. You've seen that the coin go from 19,000 back to 3 to 12, from 12,000 back to 5. We're talking about 50% plus cuts here. And at any time, if you'd have been in that moment, and if you're complaining about a cut from 18 cent to 13 cent, I can only imagine getting cut from 19,000 to $3,000 or from 12,000 to $5,000, right? So you have to kind of keep in mind, like I said in that Twitter chart, if you're long term, your mindset needs to match that and say, okay, historically, when do these coins perform best? Is it normal for us to be having this volatility now, and based off of where we are in the cycle, and then what typically happens at a later point in the cycle? That's really what matters. The best thing that would happen, it was kind of like what I said in that Twitter post, the X post, which was, the reason you cheer for those coins to set that higher high is because that sets the marker for the run, right? You want, prior to the halving, you want Doge to hit, 20 cent, 30 cent, 50 cent, all that kind of good stuff. You want it to go as high as humanly possible prior to the halving so that that can set the market, because typically, well, not even typically, 100% of the time thus far in the market, these coins have performed multiples of what they did prior to the halving. So that's the part that excites me. So let's compare that overall to Doge. So let's go back here. I want to show you. I show you with Bitcoin. I'm going to show you with Doge, because people like to have short-term cycles here, short-term memory, and say, "Oh, it's just Doge." Oh, excuse me, this is a trading view. It's just Doge. Doge is getting picked on. Doge is a trash coin. It's only happening to Doge, and then literally every coin is following the exact same cycle. Like I'm going to start saying, show evidence of your. When people say, "Oh, Doge is trash," and it's doing this here, I'm going to start to say, show me evidence of a coin not showing a identical pattern right now, right? Because people like to do price action and compare a supply and demand coin to a currency, but I'm talking about the actual tone of the market here. You'll see the comparisons, right? And the unique thing is, this is prior to Doge even going mainstream. Because now, because I believe 2024 will kind of mirror more of 2016 compared to 2021, 2020. That's because it's being more organic. But overall, you're going to get similar price action, right? So let's go back to, let's say, what am I doing? let's go at 2016. I want to show the ups and downs here, right? So yeah, this is technically where it gets to the good part, but you can kind of see like the flat line during the 2016 run. This would be around Bitcoin's halving up here. You see the price here, 0.000237. Volume on the 24-hour was less than $250,000. We're talking about like $127,000 on the 24-hour, right? 2017 rolls around. We're talking about 53,088,000 in a 24-hour period. I don't even want to do the math on that, but I'm pretty sure that's like, let's see, from 100,000 to 53, 10 per million. What is it, like 5,000%, 50,000%? So 5,000%. So we're talking about a huge increase here overall in the pricing, but the biggest thing that we're going to talk about here is the fact that this is trending along with Bitcoin. And this is when Dogecoin, I want to say it was a nobody, but it certainly wasn't a top 10 coin. Like 90% plus of the people that's in the coin right now didn't know it existed at that time. This is before TikTok, before Elon. It was still following the pattern of Bitcoin. So even with Dogecoin probably not even a top 100 coin at that time, probably not even a top 50 coin at that time, we are seeing it still mirror the trends of Bitcoin. So if you're saying that if that happened then, and then we're seeing it just peaked, what is this, 2018 at 235.11 million in 2018. Getting to 1711 on the price, 0.01711 on the price. So still trending along with Bitcoin. So as Bitcoin is going from 17,000 to 3,000 to 12,000 to 5, Dogecoin is still chugging along. Liquidity in the market is still following those that price action. And then people are worried about a divergence now in the price. Now that Dogecoin has more followers than ever. Now that Dogecoin is growing on the monthly basis, the number of wallets of holders. Now that Dogecoin is a top 10 coin, they're saying, "Oh, this is when we're going to get the divergence." Not when Dogecoin wasn't even thought of as far as the mass market, and didn't even really have liquidity. Absolutely had zero utility anywhere. Wasn't even being talked about that much besides like on Reddit. Now we're going to get that divergence. Like, you have to kind of put things into perspective. Otherwise, you're going to be talked out of your positions here, especially listening to the tone of the market or from people that shouldn't be in crypto anyway and should probably be investing in index funds and Vanguard accounts. So liquidations, 24 hours, 3.1. Long liquidations, 1.2. Shorts are leading liquidations right now. long short ratio has not changed much despite price action. It is still overwhelmingly long. 5 minutes 73 to 26, 30 minutes 73 to 26, 1 hour 73 to 26, 4 hours 74 to 25, and 1 day 74.97 to 25.03. So so literally about 3 to 1 across the board. Has not changed much at all over the last couple of days. Let's check the OI and see. I think we're around 1 point. Let's see. Yeah, so still hovering around, what is this, like $500 million? I don't think we'll probably start to see a peak in that once we get like above 15 cent again. It's still up 0.18% on the day, right around 580 million on open interest. Binance leading the charts on that. I don't think we'll see that billion mark until we get around the 18 cent mark, or until Bitcoin probably is around like 65K again. And then we'll start to see that extreme bullishness in the options. But right now, the ones that are coming in are still long. It's not making a huge divergence between that and price action. People are still, despite the price action at 18 cent, they're still going long. At 13 cent, they're still going long. That's the question as far as for where the bottom is being priced in. So as far as for the entry and coming into the coins, where the bottom is, all that kind of good stuff, like a lot of the questions and things that you're seeing, the biggest thing that you're going to look for is what are the macros saying? Are we going to get some divergence in the crypto market from Fed rates? I know we had a big scare and they kind of remained unchanged. So now we're seeing stability kind of come back into the market from the Powell announcement and the rates being unchanged, and whether or not we're having like macros or wars and stuff. All of that, and I'm not saying it doesn't matter, all of that it has what I would call shock value in the market, right? It's kind of like if the CEO of a prominent company was involved in some kind of scandal, right? Yes, it can affect the market for that day, maybe even a few days, or leadership. Is the CEO going to step down? All that kind of stuff. You can see the sways in the market, but overall, it's just a little blip on the radar, and it doesn't change what's fundamentally going on with the company, and it doesn't change what's fundamentally going to happen over the long term, right? The cycle is historically 18 months. It's not in a trajectory where this is where it needs to go. I can understand if Bitcoin peaked at 72 and Bitcoin was still running and Bitcoin was like over $100,000 and Dogecoin is going the opposite direction. Yes, that would be a cause for concern. But as far as for like we saw on CoinMarketCap, the charts ascending and descending together, the entire market having a sell-off like simultaneously. And now we're saying that, okay, so not the entire market is screwed, not Bitcoin is screwed, not Ethereum is screwed, but just Dogecoin. Like, come on, guys. So I wanted to just point that out, that the chart, and it kind of gets some history as well, just to kind of let you guys know that historically there still isn't any divergence. We've all seen this before. We've seen these dips. We've seen plus 50% cuts on coins before the initial run up. The thing that I was kind of hoping would save us from such an aggressive cut was the initial aggressiveness of the run up. And I was hoping that can kind of provide a cushion where we wouldn't see an aggressive sell-off like we did historically. And it's turning out that may not be the case. We may still get that aggressive sell-off regardless. And just to let you know, a 50% cut on on Bitcoin from 72 will put Bitcoin around $35,000 to $40,000 before the run up. So even if it went that low, that is still historically within the normal state of what happened. So so we're talking about 50% cut in Doge. Doge would typically we see more aggression to the downside, but even then I'll still put it somewhere between like 10 and 12. But even now with the wicks that we're getting, it's hard to say if it'll go that low, because we typically have the bigger numbers on the sell-offs and for like these coins, and the lower that they go, because people know where we are in the cycle, aggressiveness with the buying orders comes in, and we typically we may hit those numbers, but it's only like for a split second. So what you would consider like a flash crash or we get that number and then we see like a bounce back up just because of the amount of volume that comes in at certain numbers. So I wouldn't necessarily try and time it, but if you are looking at the charts and you're like, hey, you know what, that makes sense. This historically has happened. And you're saying, okay, well, since we had this initial run up, where the pools of, I have an idea where the pools of liquidity are, at least for the next 10, 15 cent. I want to make some entries now. These are great positions here based off of the charts. So the charts are not God, but they certainly help you from just saying, I'm just going to see what happens. It's putting some fundamentals and taking a look at pools of liquidity and seeing where things are likely to happen as price action. It's like it's more so, instead of just saying I'm taking a guess, it's taking an educated guess based off of history and price action and bundling it all together so that it makes sense and you can have a more sophisticated way of investing. So history certainly plays a part, and right now we are in alignment with that. So I hope this video makes sense and hopes it provides some value for all of you, so you can kind of get some perspective on where we are in the cycle and where we are going forward, and the fact that this has happened 2016, 2020, and again in 2024. This is nothing new. So if you found value in this video, please consider subscribing to the channel, like the video, help us get to 100,000 subscribers before Bitcoin gets to $100,000. I appreciate all of you. Leave me a comment, and I'll see you guys in the next video.